in as markets do see fractional gains heading into the market open. I want to bring in Jay Woods, Chief Market Strategist at Freedom Capital Markets. Jay, always good to see you.
Always good to be here.
Look, let's start with SEC Chairman Paul Atkins. We see the signage behind us. He's here to ring the opening bell, and our viewers might see "Make IPOs Great Again." That seems to be the tagline. What does that mean for markets?
Well, first of all, IPOs at the New York Stock Exchange have always been great. There's no better way to kick off trading in a listed company than ringing that bell at the New York Stock Exchange. But what does it mean? It gives us optimism. We had a good uptick in IPOs over the past year, but when you're trading at all-time highs, we have this optimism in the market, not maybe in sentiment, but in the market itself with price action. You want to and you expect more companies to test those public markets. We expect that uptick to continue into 2026. Maybe not at a fever pitch, but when the SEC chairman is here touting making IPOs great again, you're going to listen. And now that we're through the shutdown where some S1s were kind of held up, hopefully this leads a cascade into Q1, Q2 of next year, because there are a lot of great companies sitting on the sidelines waiting to go public, and I don't see a better time and better place than one, the New York Stock Exchange, and two, a time where we're at all-time highs. So it's good to hear him, lead that charge.
Yeah, and as we do embark now on the final month of trading, I mean, we think about IPOs the year that was 2025, not quite 2026 yet, but very strong IPOs, right? Figma, Bullish, Circle, just to name a few across different industries. How does that set us up for 2026, big picture in the markets?
Big picture, I want to look at the financial stocks. The financial stocks have had a solid year. The bigger banks really did well. Why? Because of M&A activity picking up and some IPOs. If that continues, which I suspect it will, and you're hearing endorsements for it right here, I think the financial sector is still a sector that will be one of the leaders going into 2026. And then what it does for the markets, it gives us confidence. And, we are in a 3-year bull run. And what we tend to see towards the end of a bull run, and I'm not calling for the end of a bull run, are IPOs really coming to the market. So that bell, that ceremonial bell, should be ringing a lot more frequently as we go into 2026. So I'm optimistic about the financials and the overall health of the market going into the new year.
Right near record highs, as you referenced earlier, but there has been some trepidation, a little bit of risk-off sentiment, at least of late, right? Some were calling for a bit of a choppy November. We saw the government shutdown, the longest in history, come to an end in the month of November. How closely are you watching cryptocurrency as it relates to the overall pulse on the equity market?
Well, I look at cryptos in a different light. I mean, I follow the equities, but a lot of speculative assets are tied to crypto. A lot of some of the newer companies that have gone public are tied to crypto. And when those speculative stocks go on a tremendous run, which peaked in October, and start to pull back, and then you see crypto from a technical level break some key thresholds. Now we're watching 80,000. It was 90,000. Now on the way back up, can 90,000 get recaptured? Can it hold? Will old support become resistance? These are the questions I'm watching. I think this is somewhat of a washout and a little bit of a correction, over 30% from its peak. And then if we can digest in this 85 to 90,000 range, we should be okay. But it has us a little concerned that some of the speculative froth that was in this market is coming out, and crypto is the poster child for that.
Let's talk about earnings. It's the tail end of earnings season, and some of these discount retailers set to report. Any expectations there? Yeah,
well, the discount retailers are the one hidden gem in this market. Retail, the XRT, the ETF that covers the broad basket of retail stocks, is only up about 7% year to date. The big winners? Five Below, Dollar Tree, Dollar General, which trades behind us, that stock is up 48% year to date. When you back out and you look at why they're up so much, because they were beaten down for 3 years from that COVID peak. So these are stocks that I still think have room to run, and it's going to give you an idea of what the lower income base is doing, how they're spending. That's where they're going. And then we talk about a K-shaped economy. Some of the higher end earners are actually looking for bargains. So these stores are doing well for a reason. The shoppers are back, and then the trends, as a technician, the trends have changed. And I think that any pullback there could be an opportunity to buy. But if I own them, I would hold them going into earnings.
The Fed's final decision on interest rates due next week.
Yep.
Markets by and large pricing in a 1/4 percentage point cut, but that's changed, right? A lot, actually.
It's been very volatile.
Right, in the past few weeks. What do we need to hear from the Fed?
Okay, well, right now it's the quiet period, so we can't hear anything, unfortunately. We need to hear a dovish tone after a 1/4 point cut. We say 1/4 point cut is coming because it's an 87% chance of that happening, and when you have chances above 75% a week before, generally it's 100% of the time they're going to go in that direction. In this case, a cut. So we're very curious to hear the dissension in the ranks, because what we've got is a very contentious Fed. We've got people that wanted to cut last time, didn't want to cut last time, and now we're at this point where we didn't get a lot of data because of the shutdown. We kind of flying blind. We're looking at surveys and not actual hard data. And then you have the dual mandate. Are we focused on unemployment, which is why we started cutting again, or do we go back to inflationary concerns? To me, the X factor is the Supreme Court. If a decision comes out by the end of the year, that could throw things, deeming the tariffs are illegal, that could throw a monkey wrench into this rally.
Mm-hmm. And what would that do to corporate America?
Well, it would reassess. Every CEO is going to have to adjust. Costco just filed litigation yesterday saying, okay, if we deem these tariffs illegal, I want to be paid back. I want to make sure I'm on record saying that I get this money back. You look for more companies to do that. And then what happens? How does the administration pivot and try to go around the Supreme Court and keep the tariffs on? And how do the companies then reassess what damage was caused by the tariffs? Do we get that money back? And then how does the American consumer react? Because they're going to be a little upset too. So it's an X factor. I don't know when the ruling comes out. Unfortunately, the Supreme Court, they met. It could come out before the end of the year. It could go to the second quarter of next year. Mm-hmm. So that's one thing we're keeping an eye on. But the staples are stocks that should benefit if they do pull back these tariffs.
All right, Jay Woods, Chief Market Strategist at Freedom Capital Markets, joining me in studio. Jay, thank you as always.
Thank you.